Right now is a great time to be in land investing. We're getting a lot of people who are looking to sell their land, but one of the biggest things I'm seeing is that people are missing deals on that first contact.
If they want more money and can give us more time, that's when we offer double closing. Hey, I can give you that $75,000.
But now all of a sudden they're talking this person out of selling their land, and it's not what's best for that person. A lot of times, like, this person needs the cash, but now all of a sudden they've got, dollar signs in their eyes, and
that is risk. I have to buy this property. I have to take it down with my own cash, with investors' cash. All right, guys, welcome back. Today we got Darrick B back on the podcast, and Darrick had a great idea on this episode. We're going to talk all things sales. So you get a lead in the door and what to do with that lead. And this is just a new lead, how to handle it, how to close the deal. So this is really going over sales, Darrick.
Yeah, I mean, it was kind of triggered, like I said, by we were talking before the podcast. One of my buddies who's a lawyer has all these like analytics and stuff, and he sent me this thing showing people Googling sell my land.
Yeah.
So it's like trending up, and it's like one of the highest it's ever been in the last like 5 years. And so there's lots of people out there looking to sell their land. We're sending marketing. I'm seeing, like, anecdotally, obviously with my clients, I see everything kind of this at scale. We're getting lots of leads. Like, right now is a great time to be in land investing. Right now is a great time to be sending marketing, because we're getting a lot of people who are looking to sell their land. But one of the biggest things I'm seeing is that people are missing deals on that first contact. So that's why I think we're going to really dive into that today. You get a call, what happens?
Yep. And so if you guys are new here and you guys, to get a lead, you have to send out marketing. We're going to put that all behind us. We're going to assume you guys have sent out marketing and you guys get a call or a text back. Really, those are the two main ones. Or they can even send a piece of mail back, I guess, to you. But the calling and texting is a really, really big one. So let's just start from the scratch of like defining a lead, I think, Darrick.
Yep. So this could be something. So as far as like text is concerned, it could be a positive response to your first initial text, right? Whether it's a cold text or even a follow-up text. It's that initial first contact with them through text message. Like, let's say I'm doing a follow-up text and I'm like, hey, I sent you some mail, or I'm looking to buy land in this area. I see that you own this parcel, or I see that you're listed as the owner, or do you still own it, right? I've let them know, like, hey, I'm interested in buying land and I'm trying to qualify if you own that parcel. A simple, yes, I own that parcel is a positive response to that, right? Because they know I'm looking to buy in the area.
Mm-hmm.
So any sort of positive response, sometimes it's, obviously a phone call from a mailer. Hey, I got your mailer. I am interested in selling. A lot of times they'll ask you, what's the process? Or, are you stuck at this price? Like, what's the next steps there that they want to know? Or in some cases, it's just a signed contract and sent back to your mail, right?
Yeah.
So it's sometimes
that's
on
deal
me to
done
make
just
that
about.
first
That's as
contact.
close as you get to deal done without ever talking to them. And that's why like people who aren't as good with sales love mail. It's because it's like in general you get higher quality leads and you close the deal with less contact points, right? With less personal contact points.
Correct.
All right, so let's just go from you send out. Let's start with texting because I want to focus on that first, and then we can talk about mail and you get a call back. But texting, like, okay, so you have a positive response, like you said. Someone messages you back and they say, yes, I own that land, or something positive, right? And then what? What's the next step?
Yep. So a positive response from text is really simple, because generally I'm sitting at my computer. I get that text message back right there on my kind of text message CRM. I have all their information. I've got their name. I've got their APN. I'm going to go real quick, do a 3-minute check on their land and see, like, what kind of land am I dealing with here? And obviously I'm just going to do a quick qualification, make sure it's not wet, make sure it's not sloped, make sure I have some sort of access. And generally, like, because we're doing such a great job filtering, sending our marketing, all those things are going to be great most of the time. 90% of the time we're going to be getting good land leads back. So my next step is to call them, right? I'm generally not even sending a follow-up text to that situation. If I get a positive lead, I'm calling them right away, right? Even before I've sent out a great, tell me more about the land, or whatever it is, like whatever text you want to send next, I'm going right to a phone call. I'm not sending a second text. I'm going to call them.
Mm-hmm.
That's like really the next big step. And I think people are hesitant, like, because now all of a sudden the rubber's hitting the road, right? And I think we're missing that, like, hey, you have to reach out right away to these people. And honestly, they appreciate it. I see people all the time like, oh, wow, you got back to me right away.
Mm-hmm.
This
Interesting.
Is what I do.
So
you know?
I hear a lot of mixed, not philosophies on it, but how people do this in general. Sometimes people would call. I like your approach because I'm more the person to just type call, they answer. The best that can happen is they answer and you have a call with them right now. The worst that happens is you do what you were going to do originally and text them back to set up a call. So those are the two options. You can call them back right away, or you can text them back to set up a call. If you call them back, I think calling them back right away is the best option because one, you get them on the phone now, which is best case scenario. That lead's hot, whatever. You're texting them, you know they're available. And then two, if they don't answer, you still go to the original step before that. So it's like then you try to set up a call. Is that your approach?
Absolutely. So my second text message 90% of the time is, hey, I just tried to call you, right? Because a lot of times it goes to voicemail. Let's just say 9 times out of 10, it's going to go to voicemail. They don't recognize the number I'm calling them back from because maybe it wasn't the same number I'm texting from, right? So a lot of times because I'm just trying to move quickly, I'm just calling them from my personal cell phone. I'm not even using my Google Voice number or whatever. I'm just like, hey, let me get in here because I'm excited, right?
Yeah.
So I'll call them back and I'll usually say something like, I'll call them. Voicemail goes, I'm like, hey, this is Darrick from, XYZ Land Company. I saw that you texted me back. Thank you so much for that. I'm really interested in getting more information about your land so I can give you a quick cash offer for it. Give me a call back when you get a chance. And then hang up, directly go right back to my text message. And my second text message to them is, hey, I just called you. That was my personal cell phone, which is probably why you didn't pick up. I get it. But I'd love to learn a little bit more about your land. When's a good time to chat? Or call me when you get a second. And then sometimes I'll even put my number in there for them to call me back directly. So I have those kind of 2 touch points now of me trying to get a hold of them.
Yep. So someone doesn't answer, or you call them, they don't answer. You voicemail. You leave a voicemail. Right there's a personal touch. Like that's good in general. That adds something. That's amazing.
It's so good. You want to know why? And this is like such an important thing. A lot of times people get overwhelmed with text messages and they're like, oh my gosh, so many text messages coming in and you can get ignored. And we know this in text messaging, you get ghosted all the time. It's just because people get so many text messages. Like I can show you mine. I've got like 180 unread text messages right now. My wife, it drives her crazy, but like I ignore so many text messages because I get so many marketing text messages.
Yeah.
But guess what I do 100% of the time? I listen to my voicemails, right? Or I go read the transcript from the voicemails. At no point have I ever been like, I'm not going to listen to that voicemail.
You're kind of forced
Every
to read
time.
it now. The way that iPhones
Totally,
work.
right? It
It's
shows
like
up,
when you
right?
don't answer, it shows up on your big screen. Then it goes. You get a text with it now too. With at least I do. And then it's also it's in 3 spots, and then it's also in your voicemail.
Totally. And like you in your brain, you're like, somebody's taking their time to call me back. Like I always want to know who's taking their time to call me back and why are they leaving a voicemail? Because so many people don't leave voicemails these days, right? If they can't get a hold of you, they'll just text you.
Yep.
So leaving a voicemail is very powerful.
Right. I love that.
Yep.
Well, let's get to the meat then. So this is where it gets really scary to people is someone answers the
Yep.
call. It's like, what do you do on that first call, right? They just responded and said, yes, I own 20 acres. You call them, they answer. Where do we go?
Yep. So the most important thing I think on that first call is finding out how much they want for their land. Now we have lots of cool tools now, obviously in the land portal, where I can see kind of an estimate of what their land is worth, right? I don't necessarily need to like get this fully comped on this first call. I don't
Right.
need to know what I'm gonna offer. I don't know, especially with text message, maybe I haven't like gone through the whole comping process yet. I can just kind of lean on that TLP estimate and kind of work off that, right? I could always come back and renegotiate this once I've done a little bit of due diligence, but I'm really not going to be moving too far forward until I get a signed contract. So the most important thing I need to know is how much do they want for this land? So right away, I'm going to start that conversation. Hey, we'll call him Mr. Johnson. Hey, Mr. Johnson, thanks for your text message back. I'm really interested in your land here. I see that and I usually throw something in that's very specific about their land. I see it's on the corner of, 3rd and Smith Street. It looks like really great land. What can you tell me about it? Right. So I'm just trying to start a conversation and build a little bit of trust on that first phone call
Right.
as well. So hopefully they go into start telling me a little bit of story about their land. Oh yeah, we bought it back in whatever it is. We bought it 10 years ago. We were going to build a home on it. Some of the things I'm trying to kind of get out of them is why did they buy it? Why are they looking to sell? And then eventually I'm going to say, okay, well, this all sounds great, right? I'm just going to believe everything they say on that first call. There's no reason to not. There's no reason to be like, well, I say you got those wetlands. We don't need to bring up all the stuff that we already know about their land. We don't need to bring it up right now.
Right.
What I need to do is just trust them. I will verify here once I get into due diligence, but I'm going to trust them. Great. All this stuff looks great on your land. They're looking to build a home. Maybe I ask them about utilities. And at some point, I need to breach the conversation of how much are you looking to get out of your land?
Mm.
I'm always going to use a $100,000 example. So let's say on my TLP estimate, I see that it's worth $100,000. So I know if they come in at $100,000 retail, I have a sales pitch for that retail price, right? I can sometimes talk people off that and get into a more of a double close situation. Whatever it is here, I'm generally just trying to get it under contract for something less than retail, right? Let's just say they're like, well, it's worth about 100, but I'll probably take, I'd take $80,000. Now, 80,000 for me isn't probably going to work. Even for a double close, that might be a little bit thin, knowing that, the once I start going through and looking at all the, the due diligence portion of it, I'm probably going to need this around 70K. Most of my $100,000 deals, I'm going to need around 70K for a double close. Obviously, I can do 50K for a really quick closing. So if for whatever reason they're like, we'll take 50K, I'm getting under contract. Anything under 80K or whatever, I'm going to really push to say, hey, that's great. If it's a text message and I haven't sent them a contract yet, I'm going to say 80K, awesome. Mr. Johnson, I think that's something that maybe we can work with. Do you mind if I send you an email with a contract that we can get this signed and get it under contract so I can start my due diligence right away, right? So what I'm trying to do here is get that contract signed. If they're interested in selling and they've given me a reasonable, offer, whether it's market value or less, I'm probably getting it under contract.
Got it. And that's the idea of just the different options you have. Sometimes you can subdivide it. Sometimes you can double close it. Like you're just gonna, it's under market value, so you're gonna try to make something happen out of it. Correct.
Correct.
And you have a pitch. You said for people who want retail. What about the people who want? And I want to go over that a little bit. What that sounds like. Your retail pitch.
Sure.
First off, are those most of the calls you get? They want about retail or more, or what do you see?
Yeah, it's kind of a mix. It kind of depends. With mail, it's not so much, right? Because they have this offer from me usually for 40 to 55%. So I've already kind of peeled them off the ceiling. So with mail, it's different. But with text message, yeah, I think the majority of the stuff I'm getting is at retail, maybe a little bit more of that. Sometimes people just don't understand what their land is worth.
Got
So
it.
a lot of times they're going to say, my neighbor sold their 1 acre for 20,000 an acre, and I've got 10 of those, so I want 200,000, right?
Right.
Like those are like hard conversations because you're like, well, it's probably really only worth 80K and you want 200,000. That's going to be a little bit harder of a negotiation down the line. I'm probably
Right.
not getting it under contract for 200,000. In that sort of situation where they want an exorbitant amount over retail, I'm probably not getting it under contract, and I'll probably say, well, let me get back to you in 30 minutes after I do some quick due diligence, even to see if there's a subdivide play or something like that involved.
Got it.
But if I'm close, I'm probably just going to go ahead and get it under contract.
If you're close, yeah.
Yeah.
Got it.
And I think the biggest reason why I like getting things under contract right away is because it shuts down some of those conversations that they're going to have. So let's say they've just started thinking about selling their land, right? So, my wife and I have been talking for the last couple of weeks about selling our land. We got an offer in the mail that we didn't really like, but you texted me, and so yeah, I'd love to get $100,000 for it or whatever.
Right.
Great, let's get it under contract. Maybe I can do some sort of negotiation there where I can get them down a little bit off that 100,000 right away, but I'm getting it under contract. And what that does, and this is the most important thing, is now it takes it out of their brain and it puts it on paper. They're less likely to go, if they have a commitment to somebody, they have a commitment to me for $80,000, $100,000, whatever that contract is. They're like, great, that ball is rolling in the direction I want it to roll down. I don't necessarily need to go talk to my aunt or my sister or my wife or my neighbor about this anymore. It kind of takes it off the table for them. They're like, great, we're going to sell it. And they've made that commitment, right? If you don't get it under contract, let's say they're like, yeah, I could probably do it for 80,000. And you're like, okay, well, let me go do some due diligence and I'll get back to you and see if that 80,000. Now all of a sudden they might go, we're thinking about selling it for 80, and they might talk to their neighbor who they, have over for dinner that night. And their neighbor's like, you could probably get 150 for this. And all of a sudden they're going to get talked out of selling that land because they're having all these conversations. But once
Right.
they've committed, those conversations happen far less.
Right.
So, and they happen. The problem is that a lot of those conversations happen with people who are emotionally invested in the land. Like, oh, my kids, they want that land, or
Right.
or a neighbor who automatically thinks, oh, the Walmart down the street just got built and it's worth this property is worth $500,000, and they don't know. But now all of a sudden they're talking this person out of selling their land, and it's not what's best for that person. A lot of times, like, this person needs the cash, but now all of a sudden they've got dollar signs in their eyes, and you go to call them back and they're like, no, we think we're going to hold on to it. We think it might be worth, $500,000 all of a sudden. So
Right.
the contract kind of stops those conversations from happening on a much broader scale. So we're trying to keep, them motivated. We're trying to keep them, we're trying to get them that money. And once they think that that's happening, they're like, great, Darrick will call me back if anything happens. We'll cross those bridges when we get to them, is basically the mentality.
Ever wondered how land investing can be the fastest path to financial freedom? I break it all down in my new book, One Lot at a Time. I'll show you exactly how to find, buy, and flip land for huge profits without dealing with houses, tenants, or any crazy renovations. It's simple. This is the book that I wish I had when I first started. If you're ready to take control of your financial future, grab a copy now. One Lot at a Time by Daniel Apke. Find it at your local bookstore or on Amazon.com. And so of your closings off of that philosophy, so you get it under market value, they want 80,000, it's worth, or you get it under contract, under market value, they want 80,000, it's worth 100,000, let's just say for that example. Mm-hmm. So that's like a double close. That would be more of a double close than a flip opportunity. What, sure, just because the margins are tighter. What's your percentage with that strategy of going in with asking them a price and of double closing it versus flipping it? I have a couple questions to follow up on this.
Yeah. So obviously, I always want to make sure I have enough runway, because obviously when we go to list this property, we want to make sure that we have enough profit runway to where we can get aggressive with the price, especially with something like a double close. I have 90 days to sell this thing. So it's never going to be like I need 30% margin, because in some cases I need less than 30% margin. Let's say it's a $500,000 deal, right? I probably can double close that at 400 or even 450,000. I might be able to get closer, and that's closer to like 80 or 90%. The less the property is worth, the higher that percentage gets. If it's a $50,000 property, I can maybe double close at 30,000, but things are starting to get a little bit tight there. So usually around 50,000 is where I can still double close, but I'm really double closing at that 50% margin a lot of times in those cases.
And if you have 10 deals, how many of them are double close versus traditional flip?
It's a good question.
In your business.
First year, it was a lot of just flipping. Second year, it was a lot of double closes. I got really good at double closing. Mm-hmm. I really liked double closing because I was able to maintain more profitability there.
Right.
So I moved a lot into that because that helped me build my business until I can start getting into either self-funding or doing a little bit more hard money loans. So I think for a lot of people early on, they want to get that second set of eyes and get a deal funder. And I think that's great. But double closing is such a great profit builder for your business that it has to be a part of your tool belt for deals.
Yeah, it's infinite return. But the one thing what I wanted to go at is because we started introducing a lot of double closing into our business a while back, and one thing we noticed is we're getting with offering that, we're getting less flips than we normally would have. We're getting more double closes and less flips. And then we realized the reason is because a lot of those people we were double closing with and offering that to would have taken a $48,000, $52,000, a $55,000 offer, but we followed that approach and asked what they wanted and got it under contract early, and then we didn't have time to hard negotiate down essentially because it was under contract and we already pitched the double closing. So we got more deals overall, which is great because it's you're selling or you're buying from sellers who wouldn't have sold at a flipping price of 50% value. But at the same time, we were losing margin a lot of the times because we weren't hard negotiating down on that. Right. So it's a balance, I think. And like you said, for newer people especially, double close, it's infinite returns. It's insane. Right. But you have to, when you're talking to that customer, you have to have your sales hat on, and you're talking to that potential seller. You have to have your sales hat on, and you can still fight a price. Just because they say
100%.
$80,000, and that's the biggest lesson I learned. Just because they say that 80,000 doesn't mean they won't go down to 72 on the spot. Doesn't mean I would push them more than not push them at all and just see what you can get with the price. Because if you're just taking the price every time, you're going to lose margins because you're talking to people who would probably take half of that sometimes, and you're just not hitting that spot. What do you think about that?
Yeah. Yeah. I mean, I'm listening to that story right away, right? Why did you buy the land? Why are you looking to sell the land is probably the biggest question you can ask on that first call, because then you're going to get the story, right? So if they don't really have a good reason to sell their land, right? Oh, we just thought now would be a good time. There's no time constraint to get that. Because I think the biggest advantage to the lower offers, the 50, the 40 to 55% offers, the quick flips, is that they need cash fast.
With
Because
cash,
a lot of
yeah.
times they know the value of their land, but
Mm-hmm.
once again, they don't necessarily care. And I think we're really moving into that time right now, of people looking to sell their land who are actually looking to take those better margins. So if I hear that story, hey, I lost my job or whatever it is, right?
Divorced.
I'm behind. Yeah, I'm divorced. I'm behind on taxes. My kids are going to college, and we didn't have a college fund set up, and they just got into, Harvard, and we need to pay for that, right?
Yeah.
A lot of times, land is the first thing to go. They're not going to sell their main residence. They're not going to sell their cars. They're
Yeah.
probably going to sell this asset that they're not doing anything with, right? But if they need the cash fast, I'm generally going right to there, almost probably right away, right? And at that point, like if they say that, so when I'm building that trust and I'm asking them those questions, if I hear that story, that pain point story, I'm like, okay, great. Let's talk about how quickly I can get you cash, right?
Right.
And I kind of go right into that pitch. I use the TLP estimate. Let's say I can see it's worth 100,000. I'm like, listen, if you need cash really quickly by the end of this month, here's what I can do. Right.
Yeah.
My financing department has already approved a offer on this one at $50,000. And I could do that in the 15 days, and we can get this thing closed and get you that cash fast.
Yeah.
Right.
And that's,
How's
go
that
on.
sound? Let's get you that contract.
And that's the misconception that people have. They're like, you're stealing people's land, blah, 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 blah. I already know what the comments are going to say about this. But when you have someone who wants money fast and you need funding, you have to have a price that you can get it at to where it makes sense to where you can even buy it. If I could buy his land with cash with funding at 70, 75%, that's a little bit different. But we can offer double, if they want more money and can give us more time, that's when we offer double closing. Hey, I can give you that 75,000. But you want your money in 2.5 weeks and you're pushing me, like, that is risk. I have to buy this property. I have to take it down with my own cash, with investors' cash, and I'm going to have to sit on it for a long time with my money out. There's risk there, and essentially you're trading the risk for the margin, essentially. So like that's what people, I think a lot of times when they're newer into the space, they wonder why someone would sell at 50% of market value. We can give them the option to sell at 75, 80, 90% even with the double close, but then you need more time, right? It's like at that point, it's almost more like listing with a realtor because you're gonna have to wait, list it on the market. You have to wait for it to sell. It might not sell. There's no guaranteed money. When it's the cash, you have guaranteed money at this price, and I'll get you that money in 2.5 weeks. There's a big value to that, and I just want to verify that with everyone listening because I think it's an overseen concept. Like quick cash is very powerful.
Quick, yeah, and you have to remember that land is not liquid, right? It's not like a stock that I can just go quick and sell and get my money out, or gold where I can run
Right.
to a bank or a pawn shop and exchange that gold for cash. Land is illiquid, and not only is it illiquid, banks don't like lending on land. They like lending on homes. So if they want to sell their land and use a realtor, we all know that's going to take 6 to 12 months because it's hard to find buyers for land, especially when they're going through the traditional financing channels. It's not an easy asset to sell. So being able to say, hey, if you need cash fast, if you need to liquidate this fast, I can do that, right?
Right.
And there's a million reasons why people need cash fast. And I always think it's kind of sad when people are like, you're stealing people's land, like you're offering such a low price. It's like, we're helping this person out. Like, how dare you say that, like, they need cash fast, like they're in a tough situation, and you're saying they need to go list it and wait 6 months to get their cash.
Yeah,
Like,
yeah. You
that's
go pay them
that's a
80,000. When you're looking at that kind of
yeah.
money, guys, and it's like all the risk, it's easy to say from the outside of you're buying it for 50 or 55,000 and selling it for 100. That's scamming people. But it's $55,000 cash in 2 weeks that I need to get for this person. You know what I mean? Like when it's your money, you look at it a little bit different. All of a sudden they ask for 70. That deal doesn't work for me. I'm like, no, I don't want my money out for that deal. It just, the market speaks for itself, I think.
100%.
It's like there are options to get you that 70, but my cash out for this time where I have to pay you, I have to list it, I have to have all these fees out, I might need a survey, I need to do all that. Just doesn't make sense at that point. That's what the market is. But I did want to get to, so we talked about texting and what to do with the first time lead with texting and the strategies you use for that. What's the difference with texting and mail? Let's dive into mail a little bit and talk about any differences you see.
Yeah, so with mail, obviously they have that piece of paper in their hand that says, "I can turn your land into this amount of cash." It's a powerful piece of marketing. It's why I love mail. It's just because that piece of paper in their hand is so powerful, right? And automatically kind of sets expectations as far as like, "Hey, this is what I can do for you cash wise." They can have an assumption that their land is worth whatever they want to, but when they know that I can give you cash for this amount, it kind of sets the expectation of, "Hey, like you're I know you think it's worth this, but this is what I can do cash wise really quickly," right? So a lot of times they come into that conversation with a positive phone call. Obviously, we're never going to talk somebody into selling their land who doesn't want to sell their land. Like that's never going to, you can turn those people into buyers, right? But you're not going to turn those people into sellers. And that's great, right? It's just how it is, right? Like they love their land, they're passionate about it, great. But when they call you from a piece of mail positively, you know you're already in the ballpark, right? You already know, like, hey, like I just got a call yesterday from a parcel that I'm looking at buying, and I offered it's a $370,000 lot here in Tennessee. I offered him like $200,000, so I was a little bit high in my offering price. I think I offered him 60% because of the road frontage and the possibility of subdividing this one. But right away he knew, and he's okay with that because it's hard to sell those larger parcels for cash, right? To have a cash buyer on hand, like once again, people when the price gets up there, they have to go through financing channels. So he was already like excited about the cash offer.
Yeah.
Like for him, he's like, "I've been trying to sell it, for the last few years. My wife and I, we moved away. And he knows how much it's worth. He's like, we had it listed for $400,000 a few years ago, and we didn't get any takers. They had it under contract at one point. The financing fell through. That's a pretty normal thing in land. So he was already, he was already ready to go for the cash. Now he does want a little bit more, but it's still going to work number wise. So the calls from mail are a little bit easier to get those, especially those quick close deals for sure.
Because it's the set expectation up front. They have an offer. Like if typically, and I know you get hate calls, right? So there's hate calls and there's interested potential sellers as well.
Correct.
But you get so much less leads because they see that $62,000 offer on it, and it either intrigues them or it doesn't intrigue them. If it absolutely doesn't, they might call you and scream at you, and that does happen. But if it's somewhere in the middle and they're intrigued by the offer, the lead's very, very good that's calling in. That's why we have always loved mail. If you have a 9-to-5, you have a little marketing capital, mail's phenomenal because you don't need to spend that much time on your leads. Leads take a lot of time to nurture over text and cold calling and all this other stuff. Mail, it gets to the point and you get a lot of qualified leads coming in very early. And to your point, there's like very at the top, right, where you're having $400,000 properties, 200, 300. There's very little competition there because no one has that money. Not a lot of people have that money liquid in general. Like anytime you go to the top of something and you're that expensive, the competition's just, it's like buying a $200 million business versus a $250,000 business, right? It's gonna be a much more buyers for a business at $250,000 to $1 million than there is at $200 million. It's just a whole nother level. So the funnel is much, much more narrow for those, and I've always loved that. But one thing also that we were talking about is, and we were talking about this last night on the call, it's getting more from each lead, and double closing was a good intro to that. So you have, originally we were just buying and flipping land in our business for a long time. And we asked ourselves, how can we get more from leads, right? We constantly ask the same question, right? In wholesaling, they do referrals to realtors. Okay, if they can't wholesale, they can't get the price down, let's refer it to a good realtor, and the realtor is going to give me a $500 kickback or $1,000 kickback, right? There's that. That's getting more from a lead, right? You're spending all this marketing money. How can we get more? From our perspective, there's subdividing, right? So like if you can get, if the lead wants market value, do I have the option to subdivide to take that price up and get more from that lead that wouldn't have existed because I can't buy it at market value if I don't subdivide it? Survey hacking. They don't want to sell their land, but they called you and you found out they would sell 10 acres of it and they have 70 acres. So they want to sell part of their land. That's another way to take it, get more from your lead. And there's in your business, you should always be asking yourself, how can I get something from each lead, or how can I get more from each lead? Because you'll just get a much better return on your ad spend, return on your marketing, your dollars out. You get much more. And that's how everything started, from double closing to subdividing. We're just looking for more from each lead.
Yep, exactly. And there's so many tools you need to have in your toolbox in those situations, right? Like, for instance, like the one I just did, or the one I'm working on, like I'm willing to offer a little bit more. Like, I came up to, like, my initial offer was 60% because I knew he has the road frontage. I knew that there was a certain amount of buildability on that lot. So I know that it probably can be subdivided. So that's kind of the way I was going with that. And there's a lot of times you can offer retail value, if it's $5,000 an acre, but if you subdivide it, you can get $20,000 an acre. Like, you can offer retail for that and still, 3-4x your money on a lot of those deals. So it's always an option. Like I said, like, that's why I don't necessarily shy away from getting a contract for full price.
Yeah.
Now, if I have to back out of the contract, like after I've done my due diligence and I realize it's not going to, I always say, like, once you get it under contract, I'm like, okay, great. Thanks for signing that contract, or I'll get it sent over to you. Once you sign that, I can start my due diligence. I'm gonna take 5 days to kind of get some due diligence done on the property to make sure it is what it is, right? That's when I'm gonna either try to get my drone out there. I'm gonna call the county. I'm gonna make sure they're on the deed. Like, that's when I'm kind of like going through. I'm gonna see if I can subdivide it. And then if everything works out really well, obviously I'm opening title. If it doesn't work out, right, I find out, hey, there's something wrong with the property, or there's some, whatever the case is, there's some slope that makes it not work. I can just call them and be like, hey, it's not going to work at this price, but I can make it work at this price. And then I can go into a little bit more of a hard negotiation, because then it just really becomes facts. Here's what I can do for this property, because it's worth this, right? And a lot of times it's, hey, it is worth 100,000. And this is kind of where that double close, let's say I get under a contract for 100,000 and I come back and I'm like, I knew exactly what I was getting into. So I knew I was going to have to come back and I'm gonna say, hey, like, I always tell people what their land is worth. There's too many things out there to know what their land is worth. There's too many ways for them to find this out. So I don't lie to them. I just say, hey, yeah, your land's worth $100,000. I can do, like, I give them the 3 offers, right? And this kind of goes back to texting a lot of times, because I haven't given them anything yet. I'll go, listen, if you need cash fast, I can do that. I could do $50,000 in 15 days and we can make that happen. You had already said that you'd maybe take 80 for this. So I know the 50 might be a little bit of a stretch. Your second option, I can do 70K in 90 days. Now, your third option, you can list this with a realtor. And that's when I tell them the process of using a realtor.
Yeah.
And that $70,000 offer is about what they're going to get if they use a realtor. They end up paying all their closing costs. They get it septic approved. They get their survey done. All the things being said, like, they're probably, especially if they're willing to take 80, if a realtor lists it for 100, it sits on the market for 6 months, somebody comes in and offers them 80,000, they're probably gonna be like, yeah, that's what I wanted. They'll take that offer, but then after all the fees and everything, they're gonna walk with 60.
Yeah.
And that's like, I could have given you 70 in 90 days and you're walking with 60 in 6 months. Like, that's not a good deal for that person.
Well, that's if it,
right?
yeah, that's if they didn't keep dropping price and everything too. Like, what's
Absolutely.
the percentage of properties now listed with a realtor where it goes from 100,000 to 92 to 86, and it drops, and then it goes to 80, and then it goes pending, and then it sells for 70. You know what I mean?
You see it. I see it all the time.
Yeah, and the average property, and we did a study on Land Portal with this with my machine learning team. The average property sells in the United States sells even in a hot market like last year, sells 10% under asking price for land, right? Yeah. So if it's listed for 100, it's going to sell 90, and that's listing price. That's not including the drops from original price or anything, right? So if they dropped it, it doesn't include that. So you can explain that. You can use that in your leverage. Like, there's a good you list with the realtor. Here's what happens. Maybe you'll sell it in 2 weeks for asking price, but let me give you the stats on that. Over 75% of the time, you just start feeding them, right? And it sells 10% under, and then you owe another 10% to the realtor, and then you have the title fees and all these other things, and then like you're netting 62 grand on average from this, Yep. Or you can get your money quick, and so it's. I like what you said, because you're leaning into the value that we have instead of hiding from what the realtor situation, everything else, right? You're leaning into our value and comparing it to the other options instead of hiding from it like a lot of people do, and they try to avoid this and double closing. And let's not tell them we're listing it anywhere. They're trying to hide from different things, but we have a value we can lean into, and that's what you're doing. And it will build trust and transparency, and you'll get more
100%.
deals that way over the long run.
You'll be able to sleep better too. You're not lying to them, right? And a lot of times if they take option 3, this is my favorite thing to do. They take option 3. We're going to list it with a realtor. Great, no problem. Let me send you some realtors in the area who have sold land. I want you to have the best shot at this, right? Here's the problem. Realtors, even those that have sold land, don't like selling land. They'd rather sell homes. They get bigger commissions, right? They're hard to get a hold of. For whatever reason, realtors aren't like natural entrepreneurs. They don't answer their phone. They're hard to get a hold of. If they do get a hold of one, great. All that realtor is going to do is confirm everything that you just said. They're going to come back and they're going to say, yes, your land is worth this amount of money. Oh, Darrick was right. Oh, yes, there's going to be a commission. It's going to be around, $10,000 commission because it doesn't hit my, $200,000 threshold or whatever. So I have a flat rate, $10,000 commission or $5,000 commission. The problem is if somebody else comes in with the realtor, they're going to want the same commission, right? Which is always tough. Like if I'm selling land and there's another realtor on that other side, like they're going to want the commission as well. So if I'm paying $5,000 to this guy's also going to want $5,000. So now we're $10,000 in, right? So this realtor, I hope they get a hold of realtor because that realtor's gonna confirm everything I just said. Yes, it'll probably take about 6 months to sell this property. Yes, it's worth $100,000. Yes, this is my commission. Yes, you're gonna have to pay closing costs.
6-month contract though.
6
That's
month
what you
or
need to
a
bring
year
up. Like if you,
contract
if you don't 6-month realtor contract, if they don't sell this, that's a good thing to hint at too. Like if they don't sell this in the first 3 months, I know you need your money soon. They get you in a 6 or 12-month contract, minimum 6 months, right? If you push back on them, usually it's 9 or 12 a lot of times even, and you can't just back out of that. It's not like us talking now casually. Like you're stuck in that contract. So there's a good chance you don't have that money in 6 months, and then you know what happens? The realtor's going to come back to you and ask for another 6-month extension on it.
Yep.
And that's just shows how illiquid it is. Why do you think they get them in 6-month contracts, 9 months? Because that stuff happens. They want their best chance to sell. I understand it. I would do the same thing. Like you're committing to me, give me 6 months to sell it.
Yep, totally. And I get it. I used to be a realtor. I understood that. I understand that stuff. I didn't like selling land as a realtor unless it was my own land, but I like selling homes, right? They were easier to sell.
It's an hour away from your house. They got to drive 2 hours. The realtor from we're talking rural America here. There's not just like Cincinnati or Nashville or any of these other cities. You call one guy's phone and you get 20 realtors calling you back in an hour telling you they can sell. You know what I mean? We're not in a city. We're talking rural America. It's an hour and a half from a city. There's just not floating realtors in every block like there is.
Yep, exactly. So they confirm everything you just said. Usually what happens is a week later, I get a phone call. Hey, I talked to my wife. I think we're going to go with your deal. Great. Awesome. Let me get that contract over to you. Right. Because that realtor just confirmed everything I said. Right. Because I was just telling them the truth. That's how it works. So you can use that realtor almost as your sales team on a deal that maybe doesn't look like it's going to happen. Let the realtor sell it for you. It's great.
Yeah. I love that strategy. That's good. I think this was a really solid episode. Anything that we missed out that you want to go over?
No, I just think the main thing is, try to get things locked up under contract in that first call, right? Let them know you're going to do some due diligence. Like you could even tell them like, hey, we might still need to negotiate down on this, but I'd like to get this under contract so I can start my due diligence, right? Because too many people are missing out on great deals where they have maybe even a verbal approved price, but don't have a contract signed yet because they want to do their due diligence. So they want to get it comped, or they want to send it to their coach, or they want to wait till Wednesday and do a deal review. Like it's too long.
Right.
Like you have to shorten that period of when you get a positive contact to getting that contract signed, right? Lock it in. You can always come back and negotiate later. The nice part about it is once they have that momentum in that direction, so I get a contract signed for $80,000, I have positive momentum. They've committed, right? If I come back and I'm like, hey, Mr. Johnson, your land looks great. Here's the thing, we're gonna have to get it septic approved, or I'm gonna have to get a survey. I'm gonna, the closing costs, I call a couple title companies. I'm gonna have to get this under contract for $70,000, right? I can renegotiate that contract on that second call after I've done some due diligence. And they're more likely to negotiate with you because they already have that positive like momentum in that direction, right? They've already committed. So once you have that commitment, once you have that motivation towards you, they trust you already. They don't want to pull back and start this whole thing over again. Like they've already in their mind, they've already spent the money, right? Like, great, I can get my kid to college, or, this will help me get through the next, 7 to 8, 9 months or whatever it is of not having to work. Like, great, right? Like, a lot of times that those negotiations that you have on that second call aren't going to kill the deal, because you're still going to give them a good chunk of money.
Right.
So,
Right.
yeah.
No, I love that. And just to reframe everything. So on your first call, guys, you're texting. You do a quick little, you said you do a quick little 3-minute due diligence, verify it's good land real quick. You get after you get a lead that you classify as a lead, you do a quick little check on Land Portal. Then you call them. Don't set up a time. That's one of the key takeaways I had from this. Don't set up a time to call. Call them first. They answer, great. They don't answer, you leave a voicemail, right? Best of both worlds there. And then you send them a text and say, hey, I tried to call you. When's a better time to talk? And then they hear the voicemail. You're building trust right off the rip. And then you get them on the phone, and then you go through all the different strategies that we talked about, trying to get them. The main thing is trying to get them to tell you what price they're looking for, and you can negotiate based on that. You have double closing options. You have buy and flip options. But this was packed with a lot of solid info. As always, guys, if you're listening on Spotify, make sure to give us a like, give us a review as well. If you're on YouTube, let us know what you guys think in the comment. What are you guys texting, mailing strategies that you're using for sales? Give us a comment and make sure to subscribe. But as always, Darrick, thanks for joining.
Thanks for having me.